So we're going to do the market recap. We're going to dive into the charts. You're going to be able to see the screen right now, and we're just going to go over the ones that we are currently in, and maybe a few others just to make the video a little bit longer, but we don't want to keep you any longer than 10 minutes, so let's jump right into it. Gold has been an interesting one for the past forever long. We could see there's an interesting piece of price action because you can see the price action's dropped really hard. We've stalled in this red zone here. What's happened is we've broken all the way down below, and of course we're on the weekly right now, so it's a full week's worth of data, and we closed right back above it. We're really struggling to break 1833 and sustain it. Of course we are moving down the way, but we are part of a much larger bearish move. We could actually be forming a little flag pattern, and this could actually be looking to make new highs eventually, but the possibility isn't ruled out that we could also crash below and then start maybe look to make back some of the money that this massive move up since the 3rd of September 2018 has made. So that's what we are looking at currently. If we go down to the 4 hour and get sort of a better picture of what we're looking at, we just had a little bit of news around about 7 o'clock, and that caused a little bit of erratic movements. We went up originally, then we came back all the way down again to where you see in this red zone, and now it looks like we're starting to push back down into it. So if we go down to the hourly, you see we really had a nice big rejection, steamed right into this level where we have these two highs here. We've broken this mini trend, but of course we're not really considering that too much as a serious trend because it was incredibly short and rather steep. So what's happened now is, if we can maybe even just try and throw in a few things to see if we can get a better understanding of what's happening. You can see we're hitting about that 0.5 Fibonacci of this move from these lows here to these highs. So we are seeing a little bit of a stall now, so that's what we're going to be monitoring, is see what price action's actually going to be doing here. Do we get that sort of entry and that bias that, of course, we could actually be heading up higher here? This might actually be, I mean, we're just speculating here, it's a little bit too soon, but this could actually be the second touch point of another trend, and we starting to push back up into highs like this. I mean, that could be an option. We could potentially go back up there. I do think, because we have been there a few times, 1833, potentially if we do take it these highs, it is possible, because if we go back and we have a little look, you can see this could be, if we just hide this so we can make it a little bit clearer, this could be an inverse head and shoulders. Now of course we do have that resistance here, we do have the resistance in the form of a downward trend line, but we know it's a pullback potentially, part of a bigger move. We've seen that on the monthly, it could be a flag pattern. So I am liking the look of price action to head higher, although we've really struggled so far to retrace this bearish candle here, that we've steamed into that level. We've seen that rejection, but we've not really moved away. So again, this little red level here, I mean, it's not really a big one, but it's extremely significant in telling us whether we're going to go back up to here, or we're going to then continue to try and take out these lows and move back down further. But based on this piece of price action here, shape wise, I would favour us going back up to test 1833 and potentially break up higher. But just the sheer fact that we've taken all these days to barely even retrace 80% of it, that's showing me that sellers are currently in control right now, and we are seeing that rejection and sellers coming back down at this level. So it is looking bearish. So it's two different perspectives based on one piece of analysis. One is actually looking at, of course, the structure of price and what normally happens when we see these structures in the market, and then of course the other one is price action behavior right now in terms of volume, because you can see the volume of this candle, of course, is at the day full day's candle. We've had real struggle trying to retrace that, and if we say, for example, were to take that day for Fibonacci on that, we barely, just only because of the news. We basically only traced 0.6% of it, but we've actually retraced 0.786 due to the news that spiked that up just past, and now we're coming back down to the bottom of the lows. So again, those are just a couple of things that you should watch out for. Again, I'm going to be paying attention to this here. It is looking slightly more bearish right now, and you can see here we do have a couple of levels of resistance. You can see here a nice one, and then if you see, it fits in pretty nicely with, of course, here, so it is quite a sensitive area of the market, and of course we have failed to break these highs. So that is, of course, bearish structure, but we're just going to have to wait and see, because I do think this overall is definitely bullish structure, shaping up to be bullish structure. So if we maybe do something like this, nothing really showing us anything too clean. Of course, we might just take something like this. So it would have been a deep retracement of that move. But again, this is all just speculation. So that's currently what we're looking at for on gold. We're just going to be patient and see where it wants to take us. LTC USD. Again, this is quite interesting. We've had that huge sell-off now. Of course, we've had that huge sell-off. Maybe even if we just, is that the Fibonacci we took from these lows, maybe to, I would maybe even say I would take, would we take that? I would say we would take these, because that's just an erratic spike that's obviously cleared these highs, but this is more a range that I would like to take the low from to the high, so that way we can start to work out a better, more accurate, less erratic price action. So as you can see, currently just past that 0.618 Fibonacci. Now we're really starting to push back up, and I think this day might just, I mean, we do have maybe about an hour, so we could engulf it, but I think we've still got a decent bit away yet, and with hardly any time. We're currently on 9:15 right now, so we could actually engulf this, and that would be a good sign, bullish, because of course we have had that push. I think this will be that pullback to that push. We've had a real deep retracement in a strong area of support. We have shown bullish mannerism. We've broken out this bearish trend line. We've started to really flip the script here. You can see we are getting that, potentially this lower low here, to then push back up, and then maybe even start to look to take these highs pretty soon, round about this area in red. Take out these highs, back up into that area in the red, and then that's when the market will start to reassess, because you'll have some people taking obviously profits, and you'll have people holding, so it's got to take into account and balance that liquidity to make sure that if we are going to hold, we hold, and if we don't, then of course we will start to push back down, and that will obviously set in more fear for people to take even more profits. So we'll really have to wait and see how people are feeling when we are approaching these levels. Are people having faith enough to hold it, or are they going to take their money and run? Because it's been a little bit of an up and down battle, and nothing's really been incredibly stable from a trading standpoint. It's been quite volatile, but has been tradable price action, and there's been plenty of room to make great trades. Of course, with cryptocurrencies, I do believe that although technical analysis is there, I do believe that you have to use behavioural finance more so, because there's less of a solid structure there, and of course you are susceptible to erratic moves in the market, especially when you have certain people that could literally make them move from posting on social media. So that's I do think that we are going to start to see that push back up now. We have had a great retracement. I'd imagine it would have taken a lot of liquidity now. It would have scared a lot of people out of the market. Now we're starting to see that push back up on this what would we call it, third bearish week, and it makes perfect sense. We've hit, you know, that 0.6 Fibonacci. We're pushing back above it now. That's considered a real good retracement. I like to potentially, if I'm using Fibonacci's, 0.5 and 0.6 for me, I think offers the greatest security in trade. Maybe not the best return, of course. If you were at 0.786, it's going to be a better return, but I do believe that those are the safest because they're showing not total dominance in the retracement, because you could be dominated in the retracement if it comes all the way back down to say 0.786 and beyond. Then you start to really doubt, okay, how strong are, say for example, the buyers in this scenario when the sellers are pushing them all the way back down to where they started. The less they push them down, of course, the stronger the move. So I do think now that we're going to start to see some buyers definitely stepping in the market. Of course, it's really unpredictable. You don't know what's going to happen with this in the future, but more and more people, especially with like the Bitcoin, are starting to accept it as legal tender now. A lot more eyes are getting drawn to it, and it's starting to get taken a little bit more seriously, I think, from what it was 2 or 3, maybe even 4 years ago, when it was just a thing, a coin that somebody made, and there was a lot of speculation about it. Now that we're starting to understand things like blockchain, we're starting to understand how the operations work, how it's going to get used day to day, and then obviously you have things like the banks looking to regulate, because there's got to be intermediaries somewhere to obviously profit off that, because if there isn't, I'd imagine there's going to be a lot of controversy and a lot of wars caused, because banks, ever since housing and real estate and doing transactions, of course, online and things like that, they have been getting cuts, of course, from the transaction fees from pretty much every transaction that you are making. So of course it keeps them liquid, having the money in the banks, but if you have it in, say, things like crypto wallets and blockchain, then of course it limits just how much money they have access to. It limits, of course, how much control they have over other things like offering you services to keep you part of that branch, getting you tied into several things. So ultimately they're going to keep you for 5, 10, 15, 20 years, and if they do that over 100,000, 200,000, 300,000 people, you could imagine they've got a lot of money liquid in the banks. And of course, as you all know, the banks love to trade, they love to invest in real estate, and that's how they do it. They can consume some of that money and then look to redistribute it into other deals that are going to produce them cash flow, and of course it goes round and round. So let's have a quick look at Bitcoin before we finish off. Again, Bitcoin was looking pretty attractive also, and we have gotten a small trade. You can see here, I did like the look of this. We'll just break it down ever so quickly. Again, it's just something similar. We are seeing that retracement. It's got to happen. We're going to see everyone starts panicking when you see big retracements. But of course, if you want to be making a lot of money, you should be looking for big retracements, and you should be praying for them, because it gives you opportunity at the end of them if you know how to spot them, and you know, one, based on experience of trading retracements, and of course two, looking back in history on retracements based on, you know, cryptocurrency charts, or of course forex charts, and start to study just how deep certain retracements go in certain situations, maybe at the bottom of the market, tops of the market, middles of the market, and then try and notice patterns and try and notice certain things that stick out in certain areas. Like, for example, if this was something that you had seen several times in other markets, you might have a good understanding that the 0.5 was consistently hit every single time that you were looking at these charts, and that's obviously going to give you confidence that you can start to look for retracement levels of 0.5 or 0.6, and then it's going to give you obviously other confluences to get in the trade. So I mean, I do like the look at it. We see price action, we're getting squeezed, but let's really break it down on the 4 hour and the 1 hour. So we have hit that retracement level. You can see let's just go to the daily quickly. We've taken, I think, was it these lows here to what highs? These highs, and of course we've hit that 0.5 Fibonacci price action. We're getting squeezed. We could hit lower. We could go all the way down to 0.6, where we've found this level of support here. That is a good option. Let's just see. I think that could be a nice option. So that's obviously, we're not going to rule that out. But right now, it is looking like we're getting that nice respect. We might actually engulf it on the daily. It is pushing up higher and higher. And we do still have some more time left. So we might actually get that engulfing. You can see here, price action is slowing down. So it's all right now about monitoring it and seeing where it wants to go. Create a nice little inverse head and shoulders. We've broken that neckline, so I do think we're going to look at least to target the edge of this trend line, and then we'll see what happens from there. Because then if we do break out of that, then of course that's going to open up the floodgates to then really start going back up to 60, and then of course we will look for that 64 mark. But again, we're just going to have to be patient. Of course it could crash here, it could crash all the way back down to this level, all the way back down to this level and completely hit the floor again. Never ever ruling that out. But just based on what we can see right now and based on what's happening, I do think that's probable. It's not financial advice and it's definitely not a trade signal. We've not actually entered this at all, so we're just going to be monitoring price action to look for an entry, and if that does provide it sell, then of course we're going to take it. So that's all we're going to keep you here for. It's just a short one, all the trades that we're currently in and all the markets that we are looking to get in. We will probably put up a couple more videos on some forex pairs later on in the week. Maybe even just do them start next week in the weekly watch list, because we are going to start to look to trade some more forex pairs again. We've not really been trading them the past couple of weeks. We've just been focusing mainly on this because we do have a couple of positions, so we wanted to protect the portfolio. But now that's been protected, we're going to start to go back to more of the forex trades, because there have been some really good setups and we're looking forward to putting them into the weekly watch list and obviously giving them to you. So we're going to be back, I think it will be Friday now, we're going to be back and we will do basically a weekly roundup of everything that's happened from here, all the trades, progress that we are currently in, and of course anything that we are looking to target based on Friday's close into the next week. So we hope everyone has a profitable trading week, and we'll see you in the next one.